All right, so let's get started. So the very first thing is to recognize that I want the latest share count. The latest share count is going to come from the latest financial filing. And so the latest financial filing is this Apple 10K. And we're going to put that in here. It's always on the front cover of the latest financial filing. So you see here, this is 4.7 billion shares of common stock as of October 26, 2018. Now, we're kind of in that zone where the latest 10Q hadn't actually come out, right? The company reported its first quarter, but not the 10Q. Only the press release had come out. Had the 10Q come out, we would have actually gone to the 10Q and grabbed this as the latest share count. Since the latest actual public filing is the 10K, we're going to put that in here. I'm going to copy and paste that in here. Okay, now I'm also going to change this. I want this in millions, and so this is the there's 4.7 billion in here. So I've got this formatted nicely. I wanted to make sure I got the scale right. Remember, I want my model in thousands except for per share data, as well as shares outstanding. That's in millions. So now let's get to the fun part, which is the data entry. So I'm going to go down to page, I believe it's page 44. Nope. Page 41. And I'm going to grab the income statement data that I need. I'm actually going to give myself a little bit more room here to work. And I'm going to use my trick for... First, let me zoom the screen. Let's zoom this one down to 80 so we can see everything. I think we could probably zoom in a little more here. All right, so here I'm going to use Alt, drag the mouse, grab all the data that I want. I'm going to copy that, and so that's going to be my 2018 data. And I'm actually going to zoom out a little bit more so so this is my 2018, and you'll see where I'm going with this. I'm trying to just save myself some time. And that way I don't have to kind of mess with anything. I can just kind of copy and paste. Now notice I didn't try to drag it directly in. I like to look at the data first, make sure that I've got it all right. And because I don't want to do this, because that's going to mess with my formulas. So whenever I'm doing data entry, first of all, I'm going to just I'm going to format this blue. It's going to help me. I'm going to put this in. I'm going to change this to negative. Control-Shift-N if you have Macabacus. Otherwise, what you have to do, I'll show you. Otherwise, if you're not using Macabacus and you've got, let's copy in just the values, not the formats. If you paste in everything, if you do Control-C, Control-V, it'll override the formatting, and I want this formatting like this so you know that you need to do work in here. So if I want to actually make this a negative and I don't have Macabacus, what I would need to do is I need to take a -1 off to the side, format it the way I want, and then do a paste special multiply. And what that does is I'll do that again more slowly. Alt-ES opens up paste special, and those of you who went through our crash course in Excel know that you can hit the M button. It multiplies the -1 across the range that you want, and that gets the job done. Otherwise, Control-Shift-N if you've got Macabacus does it a little bit more quickly. So let's also make sure the formatting here is right so that the negative parentheses does not ruin the alignments here. So now the reason why I didn't want to copy and paste this in is because I want this to be a subtotal, which is formatted black. So Alt plus arrow does that. So now I'm going to go in here, do the same thing, Alt-ES values. I don't want it to screw up my formatting. These are expenses, so I'm going to switch the sign there. Again, if I didn't have Macabacus, you know what to do now. Here, this is a subtotal. I do not want to just paste in this operating profit. I want to do Alt plus, and I want to make sure that I don't get all of this, but rather only gross profit net of these expenses. And I want to make sure that I didn't screw something up, because it looks like Oh, I see. So right. So here I have total operating expenses. There's another subtotal in here that my model didn't want. So I want to just make sure I did everything right. Does this 7898 square to here? Yes, 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 yes. So I feel good. And now I'm actually going to get rid of this so as to not sort of confuse me. And now this is all that's left for me to do. Now this is the line that I said, hey, we need to go and investigate this because I want 3 of these things. So if I go in here, let me now kind of zoom. Let me go in here and make this a little bigger. And now the way I'm going to quickly find that is I'm actually going to look for this term, other income expense. And I'm going to see, this is the first thing I would do, Control Find, put that in there, and look for the next place where that's being discussed. Because I figure if there's somewhere in here where there's a breakout of this, it's going to use the same terminology. And I'm correct. There's a table here that breaks out other income and expense net. It shows the detail of this. And I see that 5.6 billion of this 2 billion is interest income. Of course, it's being netted against 3.2 billion in interest expense. Apple does have some debt. And then there's this other expense. So that gives me all the ammunition I need in order to break this down. Let me actually grab this. I just need these 3 elements. I'm going to put this off to the side. So now I know that that's 2018. I know that this, oh, I didn't grab all the parentheses. It got away from me. Let's do that again. So there's that. Let's grab 2017 as well. And let's grab 2016. Okay, so now I think I can just copy and paste this in. And I should be in good shape. Notice I've sort of pre-formatted this for you. Otherwise, had you been working with a straight blank Excel spreadsheet, you would have had to do the formatting yourself by going in here and Control-Shift-1, and you would be done. Okay, so now I can calculate pre-tax profit as a subtotal. I just need to add all of this. Remember, because I'm doing everything, I'm inputting everything as every expense is a negative and income is a positive. This time Apple actually did disclose it in that correct sign convention. Otherwise I would have had to flip the sign. This is why I actually like doing all expenses as negative, because companies do kind of go back and forth. When you go in a schedule like this below the line, they actually flip it, and expenses are as a negative because they've also got income here. And so this starts confusing people, and so the best thing is just stay consistent. Everything expense is a negative, anything that's an income is a positive. All right, last but not least, I've got their taxes. They reported taxes here, and I can go back up to my back to the income statement right here, and we can see that they did report taxes right here, 13, 15, and whatever this is, 15.6. So let's put that in. Oh, we gotta paste special just values. And last but not least, oh, we got to switch the sign here. Control-Shift-N. Copy and paste. And we are good to go on the income statement. Let me delete all this junk. Alt-EAA to get rid of all the formats in here as well. Kind of bring it back to scratch. Alt-EAA. And now we move down. We want to get to EBITDA. So if you recall, I'm going to enlarge this. I want you to understand the concept here. As I mentioned in the prior video, there's a whole bunch of expenses within research and development. So for example, the engineers, the software engineers working at Apple, they get paid stock, restricted stock. They might get stock options. This is reflected in here. Even though it's a non-cash expense, under GAAP, you have to recognize that value. Same within the sales folks here, or the marketing professionals. The ones that are working at Apple, they get paid in stock or restricted stock in addition to their actual base compensation and cash compensation. And same here, right? The stock-based compensation is everywhere here because it aligns with the employees here. This is related to those of you who went through our accounting crash course. We talked about this. Same with depreciation and amortization expense. Depreciation and amortization is buried within here, and buried within here potentially, buried within here. This all lowers operating net income. Well, a lot of times, analysts, in fact, it's the most common metric of financial profitability, and notice that Apple doesn't even disclose it. They don't even talk about it. What is EBITDA? What is operating income if you exclude all the junk that's in here? Well, to figure out how much junk from depreciation, amortization, and potentially stock-based compensation is in there, we got to go to the cash flow statement, where they start with the net income, and they do disclose at the very bottom on page 45. Okay, so if you start with the net income in 2018 of 59 billion, that's the net income here. Well, how much is net income being lowered by non-cash items, namely depreciation, amortization, and stock-based compensation? So here you see those disclosures. This is usually where you go to get those disclosures. I'm just gonna paste that in here. Do the same thing here. And last but not least, I'm gonna do it for 2016. So this gets you to Apple's EBITDA. If you take EBIT plus the D&A, you get there. Now, what's increasingly happened over the last decade or so is analysts have been saying, in companies, not Apple, to Apple's credit, they don't do this, they don't even talk about EBITDA. But a lot of companies that know that analysts are very focused on EBITDA, they'll actually start getting a little opportunistic with this, and they'll identify a whole bunch of other things that are embedded in here that they want you to basically back out to get to a bigger EBITDA number. And so one of the big things that increasingly companies are pointing out to the investment community that should be, hint, hint, wink, wink, you should basically, remove this from EBITDA, even though the traditional metric of EBITDA did not add back stock-based compensation. Increasingly, you have analysts really looking at adjusted EBITDA, which looks at profits before the stock-based compensation. And so that's why you're increasingly seeing that. That's why this model has it. And if you're sort of asking whether that's a good idea or a bad idea, we spent a lot of time talking about that in our non-GAAP reporting course. I will say that this is considered aggressive because, even though this is non-cash compensation that is embedded in here, this is very real compensation. Like, you wouldn't be able to get that engineer without offering that engineer stock-based compensation, presumably. So it's a form of in-kind compensation, and there is a strong sort of conceptual point to be made to really include it in a company's expenses, to reflect it somehow. And increasingly companies are ignoring that. That's not for us to talk about here, but from a modeling perspective, we are just going to track both EBITDA and adjusted EBITDA. All right, at this point you have everything you need to just make a calculation for growth rate. So revenue growth rate, notice we shaved this because you only have 2 years of possible growth rates. Why is that? Because you've got the current year divided by the prior year. You always need the prior year to get to the growth rate. So obviously you can't do that for this year because you need 2015 data. So we remove that, and you see Apple has had tremendous amounts of growth for a business of its size. It grew between 2017 and 2018 in revenue by the size of a Fortune 100 company, right? So this $35 billion year-over-year growth, a Fortune 100 companies at the lower tiers have $35 billion in revenue. That's how much Apple grew by in 1 year. Just to give you a sense of just how much bigger it is than other massive companies that we know. Gross profit margin refers to gross profit divided by revenue, so you just had to do that. R&D as a percentage of revenue or sales, we use the terms interchangeably. We just need to switch the sign on that one, right? And the same thing for selling, general and administrative, or SG&A, divided by revenue. And now we can copy and paste. While we finish it up, switch the sign, and then taxes. And don't screw this up. Taxes not as a percentage of revenue, but when we calculate the tax rate, it's the tax expense divided by the pre-tax income. And so we got to switch that sign. And not surprisingly, Apple's tax rate in 2018 is lower than it was in 2017. As some of you know, massive tax reform took effect at the end of 2017. We're going to spend some time talking about that later on. One of the headline stories was that the actual corporate tax rate fell from 35% to 21%. Now, Apple already was paying a lower effective tax rate than the statutory rate. It's now even lower, as a result of those tax reductions. There are other things that have happened with Apple with related to the sort of tax reform. The big thing is it actually brought a lot of the cash that it was kind of hiding in Ireland to avoid paying taxes on it. They brought a lot of that back. We'll talk about that later. But for now, just be aware that Apple's tax rate, like the tax rate of most companies, has actually gone down because after 2017, the tax rate went from a statutory 35 to 21. And so everything kind of went down. So that's the tax rate there. The next thing that I wanted you to do is the balance sheet.